What's up everybody, Nate here, and the housing market in the United States has definitely seen better days. Right now, demand is drastically falling all throughout the country. Current buyers are canceling their mortgage deals at a faster rate than we have seen over the last 2 years. Inventory is going up along with interest rates in the United States, and home builder confidence is starting to plummet to near record lows. And if that sounds like it's a complete flip from what has happened over the last 2 years, well, then that's because it is. We are currently undergoing one of the biggest slowdowns in the housing market that we have seen since the 2007 and 2008 housing market crash. And if things continue to go in this direction for the foreseeable future, well, then that could mean an outright recession in the housing market. So today, I want to give you an update on everything that's currently going on in the housing market and everything that could be coming next for the housing market in 2022 and beyond. Right now in the United States, the housing market is facing a two-pronged problem. The first comes all from the Federal Reserve and their rising interest rates. In 2020 and in 2021, the Federal Reserve dropped its benchmark interest rates to nearly 0%. This made it so a lot of people could go out and spend a lot of money a lot easier. So people could get a mortgage with a really low interest rate and save hundreds of dollars every single month. It made millions of Americans eligible to get a mortgage pretty much all at once because they'd be saving so much money. But now in 2022, the Federal Reserve is raising its benchmark interest rates. But the problem is not just with those raising interest rates, it is coming from the amount that they're being raised all at once. Because the Federal Reserve is raising them so quickly and so aggressively, this is meaning that millions of Americans are being barred from getting a mortgage altogether. Like I said, over the last 2 years, it was really easy and a lot of Americans were eligible for it because, well, they could save so much money and interest rates were very low. But now that they're going up, that bars people from getting a mortgage because they simply can't afford it. Even if you're getting a 30-year fixed mortgage with putting around 20% down, which is recommended, by the way, by all of your mortgages and by me, well, then average interest rates are still going up for those individuals and families. So you're still not saving a whole lot of money, even if you were able to save a lot of money over the long run. Not only that, but if you decide that you don't want to put 20% down on a house, then your interest rate is going up even further. You're seen as a much more risky investment from the bank, so they're going to give you a much higher interest rate. That is a problem for Americans because they simply can't afford a house, and because there is still way too much demand and not enough inventory, then prices throughout the country are still going up. The other problem is, of course, inflation. Inflation in the United States for June 2022 was 9.1% year over year. It has pretty much consistently gone up since the middle parts of 2021, and that means that everything around Americans, prices that is, are going up across the board. It's getting a lot harder for Americans to go out and buy everyday goods and services, let alone a house. So if they're paying a lot more for all of those other things, well, then they're not going to be able to save as much as quickly for a down payment on a house or for closing costs or for anything that comes with a home. Americans right now literally have to choose. Are they going to pay for groceries or are they going to try to buy a new house? If they don't necessarily need a house, then they're going to wait it out, and we're starting to see that as demand is coming way down. So now this is a situation where inventory is starting to go up in the housing market because demand is coming down. Well, there's just not as many people looking to get a mortgage or buy a house. So people are still putting their house on the market though, and that means that there's a lot of homes still on the market and prices are slowly going to come down and contract a little bit because of that. But until you have inventory actually outpacing demand, then prices are not going to go into the negative. All demand in the housing market is starting to disappear though, and that's exactly why many investors and experts are worried about a recession in the housing market. This is an absolute slowdown, and it's something that means your market is not booming. In fact, it's starting to shrink. So what exactly is coming next for the housing market in 2022? Well, like I said before, demand is dropping all throughout the United States, and you're starting to see prices in a lot of markets throughout the country start to come way down. Markets that were overpriced in 2020 and in 2021 are now starting to go way down in price because people are just not able to afford homes in those areas. And because they were so sought after at the beginning parts of the pandemic, well, now they're starting to come down because those areas are not as sought after anymore. Obviously, this is going to vary from different parts of the country. I'm sure you're looking at your housing market right now and saying, Nate, my market is going way up. that is going to happen depending on what the demand and inventory is like in that area. Obviously, the housing market is just a blanket statement for all parts of the country, but at the end of the day, some markets are going to see some absolute deletion of demand and deletion of buyers, while other parts of the housing market in the United States are actually going to see an increase in all of that. So it's really going to depend what interest rates look like and what supply and demand is. But of course, buyer demand is going down and is being forced to go down because of the Federal Reserve. They're raising their interest rates, barring people from getting a house because you just simply can't afford to get a home at that super high interest rate anymore. But because there still isn't enough homes on the market and demand is still relatively high, then that means that prices are still going up and bidding wars are still happening in the United States. So many buyers are just skipping that process altogether and deciding not to get a home. Then you have to address the buyers that are currently in the housing market, the ones that are for sure set on getting a home. Well, a lot of them that thought they could get a home in 2022 are now starting to pull out their deals. Buyers are simply disappearing from the housing market. Like I said, buyer cancellations for their mortgage contracts are increasing in the United States. Buyers are looking at our economy. They're looking at their own paychecks as well, and they're deciding that they probably aren't going to be able to afford a house in the future. Even the buyers that thought they were financially ready, like I said, are thinking about what is going to happen in 2022 and beyond. And if inflation continues to get out of control, well, then they might want to wait to try to buy a home later on down the road. And that is causing the entire housing market to constrict. Now, that is a good thing in terms of prices, because like I said, as demand starts to come down, inventory is naturally going to start rising. But the problem we're seeing in the housing market right now is even though inventory is going up, it's not really helping demand because the Federal Reserve is raising their interest rates far too high and too aggressively. Because it's still really difficult to pay for a home right now, well, it doesn't really matter that inventory is going up. Home buyers still can't afford a home. Americans still can't afford a home. The average 30-year fixed mortgage interest rate in the United States right now is currently at around 5.8% to around just over 6%. If that continues to go up into the, say, 7, 8, and 9%, well, that could mean an additional $100 or $200 or $300 that an American has to pay for their mortgage simply because interest rates are going up. Nothing changed on the house. It's just because interest rates are rising. Even if that means the average price of a home comes down because inventories come up, it's not going to matter if interest rates go up too. That is kind of the whole goal from the Federal Reserve. They have the power to either raise demand or lower demand in the United States simply with their monetary policy and interest rates. Right now, they want to suck a lot of that demand out of the United States for the stock market and the housing market and commodities because we have super crazy high inflation. They want to get prices under control, and they're going to do whatever they can to do that. And of course, if inventory starts to outpace demand altogether, which is pretty slim and unlikely in the United States, but if it does happen, then we could see an outright crash in the housing market. Now, it's really difficult for a buyer to actually buy a home, meaning that homes are not in demand and nobody really wants one or can afford one. So then you're going to see prices immediately start to tank, similar to what happened in 2007 and in 2008. And this inventory problem gets a whole lot interesting when you take into account home builder sentiment. Right now, home builders are not creating new homes fast enough in the United States because the demand just simply is not there. Because prices for brand new homes and existing homes are going up, and because inflation and the cost of a home is also starting to rise, well, then Americans aren't going after those brand new homes anymore. Not only that, but you have massive supply chain issues, meaning that the cost to build a brand new home is going up exponentially in 2022. There was a part in 2021 where just to build a brand new home, it cost people an average of $30,000, $40,000, and $50,000. That's just because of inflation and all of these supply chain issues. It's hard to get lumber, and it's hard to get a lot of precious metals, and it's hard to get the labor to actually create the homes. That is only creating a further divide between supply and demand in the United States, meaning that you're going to continue to have home prices going up in the US, and your inventory is only going to increase from pre-existing homeowners. Speaking of which, that is something that has really been driving inventory in the United States over the last 6 to 8 months or so. Sellers are in FOMO right now. They have a fear of missing out because they believe that this might be the last chance that they're going to be able to sell their home for a profit. You never want to buy your home and sell it for less than what you bought it for because that would be a total loss, and it would put you in the hole. Not only do you feel really bad about your finances, but you might not have enough money to go out and buy a new home, so you're gonna have to find out another whole situation for you and your family. They see the writing on the wall, and if the United States heads into a recession and even more buyers disappear from the market, well, then they want to sell their house for a profit right now, so they're putting their house on the market and trying to get it sold to whoever is able to buy it. And the same exact thing is happening for buyers too. They're having that FOMO because they believe that if we see a recession in the next 6 to 8 months, or if we're already in a recession, right now might be the best time to buy a home because things might only get worse in the future. Interest rates are going to go up, prices may continue to go up, so they want to buy a house in 2022 as fast as possible. Not only that, but if we do see a general recession in the United States, then that could mean unemployment and layoffs continue to go up, and Americans may not be able to afford a home in the future, so they're trying to get one right now. This is very important to understand because at the end of the day, how do Americans afford a home? Well, they have to have the necessary income, and where do most Americans get their income? From their job. If we see a general recession and millions of jobs are lost, then not only are current homeowners going to be affected, but future buyers as well and future sellers. Everybody is going to be affected, and while the Federal Reserve will effectively have brought down demand and inflation because of that, our entire economy is going to be a lot worse off. Can't really see demand increase in the housing market in 2022 or in 2023 unless we have a booming economy. If we have layoffs and jobs that get lost that coincide with this entire housing market problem, well, demand really isn't going to rise all that much, even though inventory might still go up. Inflation is going to hit a lot of Americans right now, and a lot of people who are looking to sell their house are doing so because they're trying to get out of a mortgage payment. They want to downsize, or they need that additional money because inflation is hitting them hard right now. But there isn't going to be any demand because interest rates are still going to be relatively high, and Americans don't have any money to be able to go into a house. So supply and demand are going to still be at an equilibrium. You're not going to see that explosion in demand once again. The only way, and I mean only way, that you're going to see demand rise in the housing market in 2022 is based on 3 things. Number 1, the Federal Reserve lowers their benchmark interest rates, which would bring demand up because now millions more Americans can go out and get a home, just like we saw over the last 2 years. That is going to make the bar a whole lot lower, so Americans immediately qualify for a mortgage. This is something that's possible, especially if we go into a recession in the United States, because the Federal Reserve doesn't want to see a complete economic downturn like a recession for a very long time. If they see that Americans aren't spending a lot of money and that inflation is starting to come down, well, then at that point they can start stimulating the economy by lowering their benchmark interest rates. But the problem is they can't bring down inflation and make our economy boom at the same time. They can't stimulate and lower inflation at the same time, so they have to wait until a recession actually happens in order to do that. 2, the federal government and the Federal Reserve could introduce a whole lot of stimulus in our economy. So if they give out more stimulus checks, or they make mandatory payments for student loans or mortgages or whatever else paused in the United States once again, and American incomes start to go up, well, then you could see a boom in the housing market. But once again, this is all completely artificial, and it's not something that the Federal Reserve is going to want to do right now. All that's going to do is bring up inflation because you can't guarantee that Americans are going to go out and buy a home. In theory, they could pass bills and make legislation to give Americans money specifically for buying a home, but that would involve the Federal Reserve and federal government printing a lot of money, and printing a lot of money is what causes inflation in the first place. So they're probably not going to do that in 2022 or in 2023, but it's always possible. And number 3, we have what I like to call a miracle situation in our economy. This is where the Federal Reserve is going to raise interest rates a lot and aggressively, but it's just enough to slow demand in our economy, but not enough to completely bar people from getting mortgages, meaning that inventory is going to come up and demand will go down, but they will both be very close to an equilibrium. Not only that, but our entire economy would completely avoid a recession, meaning jobs would stay strong and incomes and wages would also remain strong in the United States, giving Americans the money that they need to afford a home. That would cause demand in the housing market to stay pretty much stable while inventory went back up, but like I said, just enough to where Americans are still buying homes and there's not too many houses on the market to cause an outright crash. A lot of things need to happen to reach a near equilibrium in the housing market. I say a near equilibrium because historically, we have never had a clear equilibrium in the housing market. There has always been way more demand for buying a house than there are houses on the market, because simply that's the American dream, and it pretty much always has been. But now I want to hear from you on this issue. Do you think that we're going to have a complete miracle situation in the housing market, or do you think that this housing market downturn is going to just continue to get worse in 2022 and beyond? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.